Hey guys, so per usual, everything on this channel is for educational purposes only and is not intended as financial advice. So I got a new microphone, I got a pop filter here. Let's give it a whirl. So I got a bunch of charts to talk about, past, present, and future. Per usual, everything will be in the description box, so definitely check that out if you're interested in looking at any of these charts further. So here we go. We did break up out of this triangle, so let's talk about it. Now you'll notice a few days ago on the 26th, I tweeted out this chart, and you know, the question some people might be thinking is, why did I say what I did, and why did that actually happen? Maybe you don't believe in the cloud, maybe you think it's all garbage. That's okay too. We're going to go over some other ways that you could have predicted this or saw how this would have played out or did play out. So basically I said, you know, we're getting this triangle, it's going to sort of complete, it's going to go on for a while. Something's going to happen, we're going to just get this sudden candle of 100, who knows what CNY. We'll look at that on a lower time frame. So I had a small long, even though the cloud was predicting, when the price is below the cloud, that's a bearish sign. So generally you're not looking for longs when the price is below the cloud, but I did notice this entity here, which is known as the Kumo twist, which says this is a reversal opportunity because there is a little resistance, if any, in this area. So actually in China we broke a little early, so let's go through some more here. So here is the Bitstamp chart. You can see we almost broke exactly where I, was sort of predicting, where the cloud was predicting. It isn't necessarily what I'm predicting, it's just like, the cloud does what it wants to do 30 periods ahead of time, and it just works out more often than not. So you can see we had to shoot up to the key Kumo twist. And then now you can see we're above the Kumo twist. This is Bitstamp again. I'll be switching between Bitstamp and OKCoin CNY. So yeah, again, Kumo twist, resistance was thin. For some reason this looks a little different. I'm not really sure why. I think it's because I have the lines on and off. But anyway, this is why I'm saying stuff like this when I say, oh look, we have an opportunity of a breakout here. Some people think I'm knucking futs when I say that, but this is why I say what I say, because it's possible and it does happen. So another thing everyone and their mother was looking at would have been this diagonal, and you might think to yourself, diags are garbage, diags never play out, diags never work. That's not really the point. The point is, what is everyone else looking at? Everyone else is looking at this, I can guarantee you, based on the TradingView charts and Telegram charts. iBank Bitcoins, for instance, tweeting about diag. So everybody's looking at this diag, okay? So on the 30th, I was saying it's getting close, okay? And maybe you're not convinced about the cloud, maybe you don't know about the cloud, maybe you don't care about the cloud. Here's another way of confirming we broke something here. There's some, if you're not convinced by the candle, the size of the candle, you're at least convinced, again, that we broke some sort of significant level based on higher lows, based on arbitrary diagonal line. The point is, again, we're looking for confluence, we're trying to build evidence for our case, we're trying to build evidence for our hypothesis, we're trying to build evidence to develop that this is in fact a trend, the beginning of the trend, and not anything else, okay? So there's the diag. B-bands, again, build your tool belt. If you don't like it, don't use it. I'm just going to show everybody everything. I'm just generally pretty quick with going through all this stuff. That's why it's not like a waste of time for me to just look through all this real quick. The big time sucker for me is tweeting all this out and labeling everything. But anyway, so before this breakout happened, I noticed that on the B-bands on 30, so I changed this to 30. There's a chart explanation for that. It's buried in here somewhere. Down here, changes to default B-bands, if you're interested in looking at that. So basically we had the ascending triangle, everyone knows about that. We had a squeeze of the B-bands on 30. We had a breakout which eventually stopped at the R3. We had another squeeze before the Bitfinex downtime hack, which hit the S3 pivot. My hypothesis was that when this breaks, I said in here that I was neutral because I didn't really know either way. That when this breaks, it's going to hit R3 or it's going to hit S3 based on the past two. Certainly prior events aren't generally always forecasts of future events, but it's something to look at and to pay attention to. The other reason this was more bearish than bullish is because it was below the median of the B-bands for quite some time, just like it was here. It was not necessarily a fake out, I don't think. There was not necessarily a heel, what some people may call a heel right here, where price like tests the lower end of the B-band, which gets supported or rejected and then goes north. Okay, we didn't necessarily have that here. Maybe because this was, this is definitely different. I think even Bollinger said himself that having two squeezes like this was pretty rare. This was actually the tightest squeeze ever on multiple settings, 20 on 30. So not a common thing going on here. Very strange stuff, possibly due to just skittish traders from the Bitfinex hack, the lack of liquidity from the Bitfinex hack, lack of liquidity from having holiday, summertime, who knows, all sorts of stuff, right? But the point is, there was a squeeze, regardless of, there's always the question of, is this just sideways because no one's paying attention, no one cares about it, right? I'm just generally of the persuasion that any B-band squeeze is a relevant squeeze on a high time frame like this. So I'm going to be paying attention to it. And as you can see, I'm also drawing in these triangles. They're just another representation of the squeeze. So we broke out. Great. So keeping this in mind, I'm expecting a reach for 5,300. This is at 4K. Okay, from 4K, 3,800, 5,300. That was the projection. Keep that in mind. We'll go through that. So a ton of people are asking me, which is a very good question, how do I know when to get out? How do I know when to get in? The classic scenario I'm using is like, you just woke up, you looked at a chart, something happened, you didn't have your alarm set, you don't believe in alarms or whatever. What do I do? What do I do? Do I get in? Do I FOMO? What do I do? So a lot of this rally situation, rally scenario, plays out the same way generally every single time, okay? So it's important to understand charts like this, which is what I have pinned on my Twitter for a reason, because it's so important to watch for this stuff, okay? So I'll go through this further in the current stuff, but basically, if you just open the chart and when we broke out, okay, what are you looking for? You're looking for divs. What is a div? A divergence is when there's a higher price. If it's a bull rally, you're looking for a bear div as far as signs of weakness, okay? You're looking for bear divs, which are higher high in price, lower low on oscillator, lower high in oscillator, sorry. I always screw that up. So it's a divergence. It's not the same. Just keep that in mind. This tells you do not go long here. The probability of this continuing from this point is much lower than the probability of sideways or a pullback, okay? That's all it says. Don't overthink it. Don't say I should short this. If you want to play it like that, go for it. If you want to asterisk yourself, go for it. But trying to counter scalp a trend isn't generally the best way to make money. Granted, it's currently the beginning of the trend, so if we compare the current trend to this chart, we're basically here, okay? This chart also has like a a flag wedge, lower falling wedge situation going on. So your entry could be here, but anyway, that's besides the point. We're somewhere in here right now on the current trend. So as you can see here, there was a big retrace. Okay, I'm expecting sort of the same thing on this current price, and I'll show you that. So again, I'm using cloud, I'm using the hourly. We had a B-band squeeze, we had a Kumo breakout, we have all this same stuff right now, okay? RSI was ranging. RSI breaks the range, we get a bear div. Now, it's your decision whether or not you close your long or not. If it's the first of three, there's usually three sort of runs up in a rally, I do not close anything. I just keep a stop, generally at like the cloud level, okay? My bids are always at the Kijun, like I say here. Place bids on Kijun, stops in cloud. It's robotic, it's the same every time. I don't ever change that, ever. I always use that same system, okay? The more systematic you are, the more repetitive, the more similar, the more emotion is out of the picture. Because you're going to see this and you're going to think, oh my god, we were sideways for 2 weeks. Where do I get in? Where do I get in? And then you're going to see a pullback and you're going to say, oh my god, where do I get out? I need to get out. This is going to pull back. Okay, just step back. Whatever system you use, maybe it's EMAs, maybe it's nothing. If you're one of those people who believe in the naked chart system, whatever, I don't care. Just keep in mind your system, fall back on your system, avoid emotions, blah blah blah, avoid Telegram and TeamSpeak if that gets to you, Okay, back to this. So I'm saying I'm stopped out, and the price goes into the cloud, I'm stopped out. You can re-long based on TK recross. This is kind of potentially too much detail, but again, I'm looking for bear divs this whole way up, okay? Higher high in price, a convincingly higher high, not like the same height, okay? This is like a wick up, okay? Wick up, bear div, wick up, bear div. And again, your bids are always at the Kijun, your stops are always at the cloud, and you'll notice when the price goes way up, your stops are going to be way down here. So use some common sense and move your stops up. If you want to, you don't have to. And again, usually the RSI has a support trend line. When everything's said and done, typically after 3 runs, 3 bear divs, we get the break of the support line, and that's it. You can certainly keep trying to trade the trend, but it's not, maybe not be too profitable on the lower time frames, okay? So let's look at basically what I was just saying, the beginning of the trend, okay? Again, it's almost identical. Sideways, nothingness. The cloud is terrible, I repeat, terrible at deciphering sideways, okay? That's why I stick to B-bands or anything else besides the cloud, okay? Cloud is meant for trending markets, period. Cloud is meant to capture 80% of the move, period. So again, my interpretation of what's being range bound, we're just bouncing between 30 and 70 on the RSI. All of a sudden, I don't know, this was pretty fast, from like 38.20 to 40.30, whatever it was. It was like a few minutes, if that. So like, if you're not long, what are you gonna do? If you're short, you're probably stopped out. You're probably margin called. What are you gonna do? I was lucky. I happened to be long from like over here somewhere. Okay, I was holding for 10 days, so I just had all the time in the world on one broker when the fees are so low. So the point is, you either are asleep or whatever. This happens. Oh crap! Something's going on. What am I gonna do? And again, if you remember this chart, this is hard to see, I know, but there's a falling wedge sort of here, okay? A flag, falling wedge. Again, we get a flag. This is a pretty convincing, a nice support line. You get this like stop candle, stop test, stop out, whatever. But you get the flag, it looks like it's going to break down, and it doesn't, it keeps going, okay? I actually saw this a little later than this point. Let's get to that. So again, this is the beginning of the trend. If you're not already long, you're going to be putting your bids at the Kijun, and this will follow the price up, okay, should price stay sideways. And you can see already bear div, right? Now typically you get that on anything that goes in buck wild like this. So again, here's the bear div, and I say do not open along here despite euphoria signal, okay? Bids at Kijun 4K. Any psychological level, 4K, 650, 600, whatever it is, 600. So here's the before, here's the after. You can see it's a bloody mess, okay? It's just sideways. You don't want to be long at the wick, okay? You don't want to be that guy. You don't want to be me from 2014, okay? Don't be that guy. Just stay out. Just wait for it. If it's real, if it's a real trend, it's going to pull back. It's going to keep going. The bus has plenty of seats left. There's plenty of tickets on the train. Not so many tickets or seats on the rocket ship, but you get the point. This is going to come back. And we'll look at what the current prices. I haven't looked at it in a little while. So yeah. Now you can also notice that this price range is like way bigger than these past few days were, which is pretty interesting. Lots of volatility up in here. So if you like to scalp on low time frames, that's a good time to do that. Another thing I like to look at when I sit down and something's happening, I look at the futures premium. Now what this is showing is OKCoin futures and how high it is compared to spot, which is Bitstamp, Bitfinex, OKCoin, spot. So the line, which is this white line, is China minus the West. The math is a little messed up because Bitfinex has a giant premium now compared to other exchanges, but it's still valid. The red is the weekly premium, blue is quarterly premium. So I said this back here, but when we see a rally that's driven by weekly premiums, that is generally what I would consider a healthy rally, okay? But whereas when we have a quarterly premium driven rally, not so healthy. That's only one example. There are more examples if you look back to when quarterlies first started. Again, this isn't exactly either one of those, but it's at least there's some follow through with weekly. There's some follow through with CNY versus the West premium, Chinese premium. So that's good as far as the bulls are concerned. Another thing I'm looking at low time frames. This is a 30-minute. I noticed 30-minute OKCoin. I noticed there was a potential head and shoulder, or a cup and handle here. Cup and handle is a bullish continuation. So if I'm just following it through, what I'm doing is I'm fibbing things out. I'm looking to see, is the handle forming? How deep is the cup? You can see on the 50% fib over here, we have 4 or 5 wick touches. That tells me that fib is real. You can see it's kind of arbitrary because I drew it from this wick. I drew from this wick up here and not this wick over here. I don't know, it just made more sense to me. So again, the handle looks real to me. I'm calling cup and handle this whole way. Again, more U-shaped, more handle shape forming, and boom, we finally get the continuation. I was expecting somewhat of a touch of this fib extension, which I don't think we actually got yet. But again, you can use small time frames, you can use whatever you want. There's always something somewhere, okay? As far as entries are concerned. Another thing I'm looking at is when these TK lines converge. This is a super low time frame, but when the TK lines converge, that tells me something should happen soon as far as continuation or reversal. That's why there's another chart I was saying we could drop back down below 4K, which didn't happen. We made a higher high. This is closer to the current chart action. Again, I'm saying, is this a rising wedge? Is this a cup and handle? I'm expecting this to break down just because there's a massive bear div still. Where's my target on the breakdown? 4K, again, psychological level, or the Kijun, which will sort of come up to this level. Not rocket science. So that was past and present. Let's look towards the future. Let's look for some targets. Let's gather some evidence for ourselves as to where we think this will be based on multiple things, otherwise known as confluence, okay? I'm looking at 3-day B-bands here on 14. Kind of strange, I know. But it's showing 650 as resistance based on the upper limit of this B-band, okay? So it's keeping that in mind. I'm going to put all this on one chart just so you can see what I sort of do. But 650. Okay. Something else to pay attention to is this pitchfork. Not everyone's favorite, I know. But again, we were sort of out of the pitchfork. We're back into the pitchfork. What's the target? According to the pitchfork, the target is this diagonal, this green diagonal, around 4,800. The other thing about the pitchfork, it sort of gives a time course as to when that zone or level is to be expected. And then if we look at the daily with the pitchfork from the weekly, you can see we were sort of out of this in no man's land, out of the pitchfork for a little while. Finally got back into the pitchfork. The first target that myself and everyone's going to be looking at is basically where this triangle broke down, okay? And you can see some people call it in Forex filling the gap. There's going to be some gap filling here, which is buying back up to this zone. So I'm expecting heavy resistance here and then sort of break up from the triangle breakdown to the diag of the pitchfork. So let's run through how I gather evidence as far as where I think stuff's going. So let's start with oscillators. Stoke on the ground, turning up, that's good. It's not necessarily bullish, but it's definitely not bearish. RSI is not overbought, that's good. That says we have room to go up. Great, so let's go to that for a second. Volume, kind of pitiful right now. Expecting this to get explosive comparative to this zone. Hopefully something. This is Bitstamp. But right now there's really nothing going on. So this could get pretty crazy. Somewhere up here, you know. I don't know. Volume not looking great. Let's just turn that off for a second. So now if we look at price, well, one of the first things I like to do, because I like cloud, where are the cloud targets? So let's just draw this here. I'm just going to draw a red line. Resistance. Let's take cloud off. Horizontals, not rocket science. You can watch the horizontal video. I'm looking at where price broke down from. Here, potentially here. We already have a weekly cloud level there, so I'm just going to leave that as is. So it's pretty good for weekly. Let's move to daily. And if we go turn on the oscillators, Stoke is crossed up in bullish territory, that's good. RSI's got plenty of room for up, so this again shows you there's plenty of room for continuation, okay? Great. If you notice, I don't really pay attention to oscillators too much. Turn the cloud back on. Again, we have Kuban breakout, great. We're looking at this triangle zone everyone's looking at, where the triangle broke down. Again, you see some confluence already with this zone, okay? Weekly cloud, triangle, let's turn on, let's check the monthly pivots. Got some other zones here. So again, lots of confluence here. There was a horizontal on the weekly, there's a monthly pivot, there's a prior monthly pivot, there's this triangle breakdown. So I'm expecting a ton of resistance here, a ton of resistance. So I'm just going to draw a whole box here. This tells me it might be a good idea to dump my long, dump some of my long, dump partial long here. A range of like 640 to 650. Again, you don't need to draw all this out, but everyone's going to be looking at this triangle as far as the target. So let's shut the pivots off. Oh, another thing I can mention, R3 is sitting on a horizontal from the weekly as well. So it's another zone. We can just say this whole zone is going to be a mess. Okay, it's going to be a lot of resistance up there. The pitchfork looks different on stamp than it does in CNY, but again, you can keep this in mind. If you want to add that to your chart, you can as well. Just this sort of like diagonal thin thing going on. So you certainly don't have to add all this to your chart, but the point is when you move down to lower time frames, you keep all that stuff on your chart so that when you're in the 15-minute, checking out cup and handles, you can see that you have a horizontal zone here from the weekly that historically is resistance. So if you're trying to go long before this breaks, you might have a bad time, okay? So this is running long. There's a few more charts. I'll wrap it up. So here's another heavily annotated chart with cloud as far as forecast, what I think is going to happen. Again, I'm looking for volume that breaks the previous sort of triangles, okay? Somewhere past here. You can see we're pretty close on OKCoin anyway. I'm looking for like a horizontal zone volume break of here. This looks to be like local top as far as volume is concerned. So if volume is up here before we reach these targets up here, I say use caution because historically volume hasn't really gotten much higher than that recently. Again, RSI is not overbought, Stochastic is crossed and bullish. If I'm looking at cloud stuff, I can see lagging span. You want that above the cloud, above the price for a long entry. It's currently above the price, not above the cloud. To be above the cloud, it would basically have to be above this level. But you can also notice, again, this triangle point. Everyone's going to be looking at that just like everyone was looking at the diag. This diag, from here. So opening along at this zone might not be immediately profitable compared to other times, okay? As I say, first pit stop, support resistance level of the triangle. 43, 40-ish, 650, 640-ish on USD. Some more cloud stuff, B-band breakout, not much volume, but convincing volume based on the prior trend, so I'd call this on volume. TK cross bullish behind the candle, you can't really see that. Kumo isn't bullish yet, but when it crosses bullish, that will be an explosive move. Either will precede that or will follow that. So it's something else to pay attention to. And again, I'm just going to keep this R3 pivot on here because I think ultimately that's where we're headed. Another thing you want to do is try to prove yourself wrong. Try to be creative. Try to think outside the box when you're thinking of targets. I look at different time frames a lot. I look at all sorts of random stuff. The TradingView charts are great for just bad ideas as well as good ideas that might lead you to other things that you weren't necessarily thinking about. I love it when people tweet and give me an idea for something at a chart that I posted or someone else posted. I'm like, oh, how did I think of that? I forget who was talking to me about this, but there's a potential inverted head and shoulders situation that could play out here. The volume profile definitely isn't there because there's huge volume on this candle. But what I did is I just took a fractal and flipped it and said, we could get some sort of broadening wedge thing. I don't know. I'm just riffing here, but if you measure that, you sort of hit 6K. Okay, I already said 5300 is the R3. So again, some more targets to pay attention to should you want to. This is something I posted a little while ago. There's a potential harmonic for a deep drop. Should we double top at this pseudo R3 is a little higher, but if we double top, that's going to be really bad, I think. So not only for the harmonic, but it also shows some weakness in the Wyckoff as far as ranging at sort of the top of a trend from 2015. So danger, danger, danger if we double top here. Lastly, futures, the quarterly opens 9/11. You can see every single quarterly in the past 4 or 5 quarterlies has opened extremely strong. This is probably the weakest one, but this is the beginning of the bull trend. I'm expecting the same. To say that we're already pumping pre-quarterly open, I think is pretty bullish. What usually happens is quarterly opens and then nobody can get in, and then everybody tries to FOMO, and then it pulls back. People panic, but you can see there's usually follow through. There wasn't here. Definitely wasn't here. Definitely wasn't here. Okay, so maybe there isn't always follow through, but there was here. On the next day, these people were bailed out. But so if you're trading an OKCoin, don't get sucked into that. You're either in the beginning or not. The odds are you won't get in the beginning because people are going to front run you, people being bots. Okay, so whether or not you find that profitable, a lot of people play the previous bi-weekly, the old quarterly. So the red is the old quarterly becoming bi-weekly, and the new quarterly opening. The other thing to notice is sort of between these contracts, the quarterly and new quarterly, tend to be kind of important time zone, time lengths as far as like deciding a direction just for the quarter. So if this is super bullish, that would be super bullish for the quarter. That's my hypothesis anyway. And then lastly, it's always great. I love this chart because it's so simple. Just keep in mind, zoom out, big picture. This is where we were in 2012. This is where we were in 2016. This thing called having happened. Okay, pay attention to that. Don't lose track. Don't lose all your coin trying to trade Chop City when some big stuff is probably coming down the pipeline. So as usual, like, dislike, share, comment, subscribe. Hit me up on Twitter, Telegram. Everybody's talking to me on all that stuff. That's great. If you have any questions, don't be bashful. Let me know. As usual, happy trading. Watch for those bids at the Kijun, guys. Bids at the Kijun.